Apple stock has slid down tremendously right today after their earnings. If you're expecting some recoveries in the near future for Apple stock, this is something you need to know in this video. We were trading live in a market that's affected by the same market that Apple is getting affected by, which is consumer goods that are trading and having tariffs affect them through the Chinese tariffs that we're seeing take effect right now. So if you just, for example, take a look at the recent reports, they just reported that they got $900 million expected costs increase this quarter. So there's something that we're going to kind of lay out here. Three different analysis points for Apple. The first thing is the market. They're in a market that is being hit by some of the tariffs right now. You can see the effect and the response with the earnings call right now. Basically a 4% dip on the stock after reporting earnings. And they weren't bad earnings. In fact, if we take a look at their earnings, you can see they beat Wall Street expectations. Their earnings per share came in at 165 versus $1.63. Revenue came in at 95.4 billion as opposed to projected 94.6. Their iPhone revenue was up $1 billion. Their Mac revenue was up about $250 million versus estimates, and iPad revenue was up as well. And wearables were down just $500 million, as well as service revenue being down there about $1 billion. But gross margins, you can see they were holding steady at 47.1%. But they also say that there's limited impact as a result of tariffs, and that they expect overall revenue to grow low to mid single digits on an annual basis during the current quarter ending in June. And the finance chief, Kevin Parekh, said on the call, Apple reported 85.7 billion in sales during the June quarter last year. So essentially projecting there that they're going to just come in at, what is that, 89.5 billion here in the next quarter. So what are we looking at with the market? You see them starting to increase, but also you have the semiconductors being impacted. With the tariffs, the semiconductors started off pretty green today, and then we ended up trading SOXL or SOXS that goes up when the semiconductor market goes down. We traded it. We actually sold our position at market open. We ended the day up about $400 profit. That's what we ended it. And you can see it surged 4.9% from our entry point. And as a result of that surge, it really just came from tariffs and some of the news and investor sentiment that semiconductors were a little overextended. When they sold off and the market dipped a little bit, SOXS shot up. And why is that important to know? Well, semiconductors are going to be most likely one of the main things that are going to affect Apple, as well as some of their manufacturing in China. But when you look at their chart, let's just jump back into their chart. I don't know that this is too bad that you see this recent sell-off here today. In fact, I think it presents a very nice opportunity here for Apple stock. They were starting to recover. We started to see this V-shaped pattern where they sold off quite a bit. If we go back a year here, you can see they were on this trend upward. They dipped down with the rest of the market pretty tremendously, and they were starting to have a V-shaped recovery before selling off today. So that little dip down to that EMA is healthy and something you'd want to see before maybe a continuation up. It wouldn't be healthy to see Apple or any stock just rocket back up just as fast. And what I'm expecting is that it's going to still make a full recovery. But this day right here with this negative investor reaction is pretty good for the near term. I think that's going to be good for Apple. And the recovery, if we keep up this trend, which we're expecting to here on Apple, would be about a 20% recovery here. So you can see this level, these rising support and resistance here on Apple stock. And then you have this level right here. We saw quite the sell down here on April 7th, just half a month ago, really. And then you're starting to see this recovery here May 1st today. Started to sell off, but still looking like this move right here could take place. So if it holds its trend, it's about a 20 to 25% increase from current prices. And who knows, that could happen over the next few weeks. When you take a look at some of the levels that they're going to face on the way up, you do have this previous resistance now that they can hold a support at. It's possible we see them sell down tomorrow again or over the next few days, but they have that $200 price point support that they can hold potentially. And then if they're going to make this recovery, they're going to face that 200-day moving average right around here. You can see this level, previous resistance, previous support, as well as where the 200-day moving average would meet them, right around $220. So if we get that break above $220 and they continue to hold above the EMA, I could see this crossover and continue back up to previous highs if all news continues to be okay. And let's say that deals continue to be made regarding tariffs and that they figure out, I heard they were moving a large portion of their manufacturing over to India, which is a good deal for them because then they're not going to rely on any tariffs from China. So if they have Indian manufacturing, they also have the Apple manufacturing US. They're pledging $500 billion as of recent news to have server manufacturing in Houston. They're going to have US manufacturing in not just China, but check this out. You got Texas, California, Michigan was one of them, and you had a few other ones as well. Colorado and Oregon. This is directly from Apple in the newsroom. They're spending $500 billion in the US over the next 4 years in order to build factories in the US. And that's going to come down to manufacturing and silicon engineering. So maybe their own chips as well, which is exciting. So when it comes down to Apple and seeing the news, those are the things that chart the news. And then you have the recent earnings, which this is the financials, that third piece. $3.2 trillion market cap. They're up there in the Magnificent Seven. They've been beating their revenue, beating their earnings per share. Take a look quarter over quarter from last year. You go through the quarters here. Their net income, their profit margins, and their revenue really came out very green in their last earnings. So this is really good indication, quarter four, that they're going to, right here, that they had some good news. Some of their financials, just to kind of jump into it, gross margins here holding okay, around 44 billion, that is. Operating expenses staying about the same, really. You got net income actually increased since last quarter, and their earnings per share increasing. So, and then we kind of went over those numbers already. But yeah, from a standpoint of their earnings report, seems that their financials continue to improve and they're still, bringing in cash, and their net profit margins are staying steady. So Apple, good long-term investment as well as a short-term potential dip buy that I could see here. If we do trade it, we possibly would trade Apple here. If you go Apple, they got a 2x long that we potentially would trade. That if it's going to recover, let's say this is a Apple 2x long, that same recovery that was 25% on Apple, if it recovers here, it's a between a 40 to 90% recovery here in this index fund that's 2x of Apple. Now it's more risky, but it's something we would trade on a daily basis, maybe in our live sessions like we traded this morning, SOXS, which goes up 2% every time the semiconductor market goes down 2%. Or 1%, excuse me, so it's 2x. And that's what our focus would be. So we're going to take a look there and most likely be trading Apple on a consistent basis as well. With Tesla, we follow AI and quantum computing companies and space companies. If you ever specifically want to know how to invest in those types of companies, I would encourage you guys to join us in our live sessions each day at Market Open. It's the second link in the description. If you are serious about investing and surrounding yourself with like-minded individuals and investors, again, it's that second link in the description down below. Thanks so much for watching, guys. I appreciate you all. Thanks for almost 19 or 18,000 subscribers. I think we might have hit it today. Did we hit it today? Where are we at? 18K. We just hit it. Appreciate you guys. Thanks so much for all the support. And if I earned your thumbs up, hit that like button. Do consider subscribing. I'll catch you guys in the next video. Take care.